Today's video, we're going to talk about delinquencies in Ontario up 135%, and in BC, they are up 62%. But before we do that, if you're looking to buy or sell real estate and you enjoy this free content that we give out, please consider booking a buyer or a seller call down below in the first link in the description. We get to know your situation, and you can see if we're a good fit to help you through your real estate needs. Mortgage delinquencies were up more than 50% across Canada at the end of the fourth quarter last year, according to Statistics Canada. Not surprisingly, the two provinces leading the way are both the most expensive provinces to own real estate in, which is Ontario and British Columbia. This really shouldn't come as a surprise to anyone, as Canadian real estate hit their peak and then the Bank of Canada was forced to embark on its fastest hiking cycle in history to combat high levels of inflation due to pandemic spending, supply chain issues, and so many more economic factors. An especially worrying trend is a sharp increase in mortgage borrowers filing for bankruptcy, the report says. Canada-wide, such filings are up 23%, but Ontario and British Columbia, bankruptcy filings spiked at 76.5% and 46.5% respectively. With the prospect of renewing mortgages at substantially higher rates than current ones, consumers who locked in historically low interest rates in 2020, particularly those with substantial loan amounts due to the high bidding wars that we saw, may face challenges in sustaining their payments. Equifax says anyone who renewed their mortgage in the fourth quarter of 2023 saw their payments increase on average by $457, with hikes of nearly $680 and even beyond that in Ontario and BC. Mortgagors in Ontario and British Columbia are increasingly missing payments on their credit card, especially younger homeowners. Non-mortgage debt is also climbing. It's up 4.1% in the fourth quarter, which is mostly driven by credit card spending. But that doesn't mean Canadians are spending more and the economy is buzzing along. It's actually quite the opposite. People are relying on these credit cards to pay their bills. And what we see is that fewer Canadians are paying off their credit card bills in full, a trend that is especially noticeable among those with balances over $50,000 on variable rate home equity lines of credits, also known as HELOCs, the report said. The average payment per dollar spent also declined. The high cost of living continues to have an impact across all consumer segments and is leading to a worrying increase in non-mortgage delinquency rates, said the report. Over 153,000 more consumers miss payments on credit products, which is above pre-pandemic levels. Auto loans and unsecured lines of credit are also showing rising arrear levels, the report said. Factors such as high cost of living, inflation, credit card payments, and mortgage renewal worries are coming at consumers right now in Canada. What we are seeing is budgets have been pushed to the limit for some. There's no doubt Canadians are feeling the financial pinch right now. But this is not all catastrophic for Canadian real estate. There are over 5 million residential mortgages in Canada, and only 10,000 of which are delinquent. The national arrears rate sits at 0.18%, which is very, very low. And we're really just returning to the historic that we saw pre-pandemic. Overall, what we are basically seeing is spending being pulled back, credit cards rising, and Canadians tightening their pocketbooks, especially the younger generation. There's a huge amount of mortgages coming due at renewal in the next 3 years, so we have to follow this data and see if it continues to trend upwards and we see more houses in arrears. Anyways, guys, please let us know what you think in the comments down below, and please consider liking and subscribing to the channel, or if you're on Spotify or Apple Podcasts, please consider leaving a review. We'll see you next week, and we're going to try and do more of these small short form videos. Thanks so much for watching.